Good afternoon, dear students. This is your business studies class. In our last class, we have discussed about principles of insurance. Today, I am going to discuss with you types of insurance. Students, insurance can be of three types: life insurance, fire insurance, and marine insurance. So, I am going to start the topic with life insurance. So, the meaning of life insurance is a contract between two parties. First party is insurance company called as insurer, and other party is insured who is taking insurance policy. So life insurance is a contract between two parties where one party promises to pay a fixed amount of money to another party, either at the happening of an event or at the expiry of period, whichever is earlier. So student, happening of event means here at the time of death of the person, or expiry of period means maturity period. Suppose life policy is taken for 10 years. If 10 years have passed, so this is called as maturity period, means policy is matured. So compensation will be paid by insurance company either at the time of death or at the expiry of the period, whichever is earlier. Suppose the person is died after 8 years, then his family member or nominee will get compensation after 8 years. And if person is alive even after 10 years, it means policy is matured. He will get compensation at the end of 10 years. And in exchange of a fixed consideration means premium, insured has to pay fixed premium to the insurance company. So this is the meaning of life insurance. Now I will discuss with you importance of life insurance. So the students' first importance is provides financial support to the family members at the time of death of the insured. If insured is died, then insurance company provide compensation to the family member. That compensation works as a financial support to the family members after the death of the insured. Second importance is life insurance gives sufficient amount to the insured at an old age. Suppose a person is alive at the time of maturity period, even then he will get full compensation from the insurance company. So in this way, compensation is a financial support to the insured at the time of old age, because in the old age earning capacities reduces. Next is life insurance promotes habit of savings among people. When anyone is taking life insurance policy, they have to pay premium to the insurance company time to time. So the payment of premium inculcate habit of savings among the people. They have to save their money so that they can pay premium to the insurance company. Otherwise, their policy will lapse. Next importance is life insurance mobilizes public savings and channelizes them into most productive uses. It means that, as you know, everyone has to pay the premium to the insurance company. So it is the saving of people. Premium is the saving of people. So insurance company is collecting the savings of people in the form of premium, and then invest that amount of premium in big companies. This is called as mobilization of savings, collection of savings, and investing them in big companies is called as channelizing them in most productive uses. In this way, insurance company leads to the economic development of the country also. Next importance is life insurance provide tax incentives. Tax incentives available to persons taking life policy. Tax incentives are also available to the person who is taking life insurance policy. According to the income tax provisions, a rebate is given on the premium paid by the person taking life insurance policy for himself or for spouse or his children. So whatever premium is paid by the insured, he will get rebate on that premium according to the Income Tax Provisions Act, as well as the compensation received by the insured, that is also tax free. In this way, tax benefits are also received in case of life insurance. So students, these all are the importance of life insurance. I discussed with you life insurance provide financial support to the family members at the time of death of the insured, and if insured is alive then he will get money for the old age. Life insurance promotes habit of saving among people. Life insurance companies mobilizes public savings, channelizes them in most productive uses. Tax incentives are also available to the persons taking life policy. Now students, I will discuss with you elements of life insurance. Now students, elements of life insurance. First is essentials of a valid contract, like essentials of a valid contract. First of all, in case of life insurance, all the essentials of a valid contract must be fulfilled, like free consent. It means insured should take life insurance policy freely without any pressure. Offer and acceptance. He must have to accept the offer given by life insurance company willingly. Lawful consideration. Amount of premium paid by insured, that must be lawful. Lawful object. Object of the insurance must be legal. Capacity to enter into a contract. Insured must have capacity to enter into the contract. Means he must be above the age of 18, as well as he should enter into the life insurance contract in a legal way, not illegal. So, this is the first element, that all the essentials of a valid contract must be fulfilled. Second is based on utmost good faith. Life insurance contract is based on principle of utmost good faith. As you all know, principle of utmost good faith says that insured as well as insurer should not hide any information from each other. So in case of life insurance, insured must tell each and everything about his health. Any of the information about health should not be hidden by the insured. Otherwise, contract will be considered illegal. Next, based on insurable interest in life assured. Life insurance is based on the principle of insurable interest. Principle of insurable interest says that person who is taking life insurance policy must have economic interest in the life of the person for whom he is taking insurance policy. And insurable interest must be present at the time of taking insurance policy. It is not compulsorily to be present at the time of maturity of policy. It is present, it must be present at the time of taking policy. I will explain you with the help of an example. There was a couple. Husband has taken life insurance policy for the wife. At the time of taking policy, he was having insurable interest in the life of wife. After 2 years, they got divorced, and after 5 years, policy got matured. After divorce, husband was not having any interest in the life of wife, but wife keep on paying premium. It means insurance contract will be considered as valid and she will get compensation after 5 years. Then what we understood here, we come to know that insurable interest was present at the time of taking policy, but it was not available at the time of maturity of policy. So I think this point is clear. Not based on the principle of indemnity. Life insurance is not based on the principle of indemnity. Principle of indemnity says that compensation will be paid on the basis of actual loss or amount of policy, whichever is less. But this is not applicable in case of life insurance because life cannot be measured in terms of money. So these are the elements of life insurance. First, I discussed with you essentials of a valid contract. Second, utmost good faith principle is followed. Insurable interest principle is followed. And principle of indemnity is not followed. So this is all about life insurance. Students, now I will discuss with you second type of insurance, that is fire insurance. So, fire insurance is a contract whereby one party promises to pay a fixed amount of money to other party on the happening of an event and in return of a fixed consideration called as premium. So here student, happening of event means occurrence of fire. Here insurance company will pay a fixed amount of money on the occurrence of fire, otherwise not, and in return insured has to pay premium to the insurance company. Students, fire insurance contract can be done for maximum 1 year. After 1 year, we have to renew the contract. This is the meaning of fire insurance. Now I will discuss with you elements of fire insurance. First element is insured must have insurable interest in the subject matter of the insurance. The person who is taking insurance policy, he must have insurable interest in the property. He must have economic interest in the property for which he is taking insurance. And that insurable interest must be present at both the time, at the time of taking policy as well as at the time of maturity of the policy. Means at the time of occurrence of fire also he must have interest in the property. Second is based on utmost good faith. In the case of fire insurance, principle of utmost good faith is followed. In case of fire insurance, insured must tell each and everything about the nature of the property as well as nature of work going on in that property. Like he has taken a policy for factory, so what type of production is done in that factory, all information should be given to the insurer. Insurer must also tell everything about the insurance contract, like terms and conditions. Next is based on principle of indemnity. Fire insurance is based on the principle of indemnity. It means at the time of loss, amount will be paid according to actual loss or policy amount, whichever is lower. Next is the insurer is liable to compensate only when fire is the proximate cause of damage or loss. So students, insurer will pay only if fire is the proximate cause. Proximate means nearest cause. It means if loss has occurred only because of fire, only then compensation will be paid by the insurer, otherwise not. Last element of fire insurance is the fire insurance contract must also fulfill all the requirements of a valid contract. Just like life insurance, fire insurance must also fulfill all the essentialities of a valid contract. For example, offer and acceptance. Offer of Insurance company must be accepted by insured willingly. Lawful object should be there. Consideration should be lawful. Free consent. Offer should be accepted freely without any pressure. Capacity of the parties. Party who is taking insurance policy must be capable to enter into the contract. All activities should be done legally. Students, these all are the elements of fire insurance. First, I discussed with you. Principle of insurable interest is followed. Principle of utmost good faith is followed. Based on the principle of indemnity, principle of proximate cause is followed, and essentialities of a valid contract are also followed. Students, in case of fire insurance, compensation will be given to the insured only if two conditions are fulfilled. First is, there must be occurrence of fire. If loss is occurred because of the fire only, then only compensation will be paid. And second thing is that fire should be accidental, non-intentional. If fire is there intentionally, in such a situation, no compensation will be paid. So these two conditions must be fulfilled, only then compensation is paid. So students, I discussed today two type of insurance, life insurance as well as fire insurance. Both are having their importance. Life insurance is very important for the life because life is uncertain, and to protect the uncertainty of life as well as to provide financial support to the family members, life insurance is must. Fire insurance is also necessary for the property which we are using. According to the nature of property, fire insurance is very important. So here topic is over. If you have any doubt, discuss with me. Thank you students.